Hi, my name is Mark. I am making this videos on behalf of Realty Capital Finance. It will be a series of informational videos breaking down the underwriting process. I will have separate videos on credit score, separate videos on loan to values, loan to costs, after repair values, appraisals, title, etc. But for now, I just would like to start with a general overview. We are private money lenders. We lend money to real estate investors using real estate as collateral. Typically, we lend for purchases, refis, cash outs, rehabs of 1 to 4 residential properties. We also do multifamily, long-term and short-term. We lend nationally besides for the Dakotas. We are private money lenders, asset-based. Asset-based means that we typically make our determination mostly on the property itself, not so much the borrower. The borrower is a major aspect, needing to have the experience and credit and cash available to make the deal. But if the property appraises and we like the property and we see the game plan that the investor envisions, whether it's a long-term hold or it's a purchase and fix and flip for profit, typically we will lend. We go up to 90% of the amount of money needed. The maximum we'll do is 90 is because we will require our borrowers to have some skin in the game so that they are financially invested in the property's success. I would like to now discuss several items that are required on all loans and give a general overview for why. One of the things that is required, obviously, on a purchase is a contract. We need to make sure that the purchase is a valid purchase. We also need to make sure that the person's buying the property for the price that they say they are, and they aren't inflating the value or deflating the value. Another thing that we would need on a rehab loan, anytime a borrower is doing construction to a property, is a scope of work, which is basically a write-up, a detailed write-up with figures and amounts of how much money will be spent on the property. We need this so that the appraiser who will evaluate the property can see what the plan is in order to determine what the after repair value will be. Additionally, we ourselves have to know what is the borrower doing to the property and do we like the plan. Another thing that we will need on all loans is a copy of the borrower's identification. It's got to be a valid identification. We need to see a picture of who our borrower is and their home address, etc., to know who they are. We also require a hard credit pull for our borrower to make sure that they have the credit worthiness that we are comfortable. We will do a background check as well to make sure there's no criminal history, as well as bankruptcies, foreclosures. We will not lend to somebody if we are uncomfortable with their background or we feel that they may foreclose on us. We may have to foreclose on them or they will file bankruptcy. Our goal is not to own the property. Our goal is to lend the investor the money, have them use the money for the property, pay us every month, and eventually pay us off. Another thing needed on all properties is a evaluation or appraisal. We need to evaluate the property, see interior photos, and have a professional say, yes, based on comps in the area, this is what the property is worth. And typically, we will only lend money based off of the appraisal. If somebody is overpaying for a property, we won't lend more if the appraiser says the property is not worth that much. And when there's a rehab, the appraisal must have the as-is and after repair value so that we are comfortable that when we lend the rehab money to the investor, the value will be there in the property. Another thing required on all properties is title insurance. We need to know that we are protected and that the seller actually has the legal authority to sell this property. Another thing is property insurance, which also includes liability insurance. We need to know if we're lending money on a property that if something were to happen to the property were to get damaged, flooded, fire, whatever may or may not occur, that our investment is protected. Liability is basically if the owner of the property is sued, we need to know that there is funds available from the insurance company to challenge this lawsuit, or if there is a payout, to pay out, and we won't lose a property because of it. Another necessary item is LLC Docs. Typically, we only lend money to a corporation or a limited liability corporation, an LLC. We need to know that the LLC is both operational. We have to see the operating agreement. We need to have the IRS identification number for the LLC. And we have to know that the LLC is still in good standing with the state that it was formed in. That is all, because the LLC is essentially our borrower and the investor is the guarantor. I will be discussing separately, in separate later videos, each one of these aspects in a greater detail, what exactly it is, what we are looking for, why it's necessary, and also stories that I myself or our team has experienced showing why these questions are necessary. Our ultimate goal, most of the time with our borrowers, is they're good people, they're trying to make some money, trying to buy a property, their background is clear, their credit is pretty good, they just want to buy a property, fix it, flip it for profit, or hold it as a rental in the long term. And we are only here to help. The entire process from beginning to end, from originating a loan all the way to closing, typically is 2, maybe 3 weeks. Mostly the holdup is the fact that the appraisal takes time to order, for the appraisal company to find an appraiser who will go out to see the property, to schedule that visit, write up the report until it comes back to us. During that time, we are typically pulling the title, ordering insurance, doing the credit and background checks, reviewing the scope of work, contracts, LLC docs, and therefore, once the appraisal comes back, we have the full package necessary to close. Typically, it's a few days until we actually close. Beginning to end, on the average deal, best case scenario is 15 days. Most of the time is 20, maybe 25 days from beginning to end. This concludes the first video in this series. If you have any questions, please don't hesitate to call or leave a comment. I will try to get to all comments and questions and respond. I look forward to seeing you in the next video, which will be about credit score.